I have Brian White here today, and Brian and I are going to argue. We're going to arm wrestle. We're going to be in a struggle over what is the correct price target. Well, not even price target, the earnings per share target for 2025. Brian, I don't know if you know it or not. I put together not a very elaborate. This is kind of almost a Warren-esque back of the napkin math type of thing, but I think it makes sense. And I thought I'd trot it out again and see if you think I'm completely nuts.
Well, you are, without a doubt. I mean, thanks for tuning in, everybody.
So I'm going to do another strange thing here. I'm going to share my thing here. I'm going to share it for
I don't know
all
if
of
you want to
you.
do that in public.
Oh, it's great. It's going to be wonderful. Just wait till you see all of the things I'm going to do here. If I could just get it up. There we go. All right, here we are. Okay. So I am going to take you through this step by step.
All
We'll
right.
start with vehicles. So my statement is here that Elon is very, very good at estimating car deliveries. He says 20 to 30%, and I was going to go with 25%. Does that work for you?
Split the difference, I think, between Juniper sales. The only reason we're not hitting 25% growth is if the changeover takes too long in each factory. I think all of that's very reasonable. And Cybertruck growth continues. We're going to see a handful of units of semi, maybe not enough to actually make a dent in it, but I think 25% is fine.
Okay. So then, and then of course, the other comment that we talked about yesterday is when FSD becomes unsupervised, then maybe 20 to 30% becomes a silly number. It becomes way too small.
For sure. Well, once the cybercab is out, all bets are off. But I think even before that, but I think for 2025, even if we get unsupervised partway through the year, it's only partway through the year.
Right.
So I
Okay.
think these are reasonable numbers, and it can take part suppliers time to ramp up. It's not like you could just go to full force shift to all factories
Right.
tomorrow. You need to
Right.
get the parts lined up.
Okay, so that would imply 450,000 additional cars, or about 2.26 million next year. I think and then I go through quarter by quarter. That doesn't matter. I'm really just looking for the end of the year number. So the simple net math to determine what the gross profit in dollars. This is how I came up with my napkin math. What was the gross profit per car in third quarter of 2023? And that works out to be $8,570 per vehicle. Now that includes the what do you call it? The ZEV credits. Okay. Okay. So that's okay. We're okay.
So far, so good. My question is, are you using automotive margin or are you looking at the entire company margin so that there's some mega pack money in a car?
No, this is 100% uh,
Automotive margin.
automotive gross profit
Perfect.
was 4,469,000,000, 469,000 cars. Divide it, you get 85.70 per vehicle. Okay.
$500 million a quarter.
$1 billion
Wow.
a quarter.
Wow.
Yes, yes, yes. All right. So 2.26 million cars times 8,500. So I'm just saying that for next year, I would assume that the gross profit margin per car, I'm sorry, the profit margin per car, yeah, the gross, well, yeah. All right. The profit margin per car would stay the same. That
Great.
we might have some decreases in the average selling price, but I would expect with especially with battery production, et cetera, with the Cybertruck uh, uh, ramping up and getting those margins down, that the margins might come down a bit, but that the average selling price might also come down a bit, so that overall maybe the average selling price per car, the average profit per car would stay the same.
Absolutely. We're going to see some growing pains as Juniper is launched, but Juniper costs less to build than the pre-refresh Model Y. So there is room for incentives. There's room for the 0% APR. There's room for the $500 referral credit discount. There's room for a lot of that stuff without negatively impacting margin before we just talk about general efficiencies and general reduction in COGS.
Okay. So now I'm going to switch. I did a lot more detail here. We won't go through all the detail. And then we come down to energy. So, quick method here. I took the gross profit from quarter three per gigawatt hour. Okay. So we had 6.9 gigawatt hours deployed. The profit was $725 million. So that would be 105 million per gigawatt hour in quarter three.
I'm gonna stop you there
Okay.
because the profit on Megapack is lumpy. We don't know how much of that profit is from new sales versus sales a quarter or 3 or 8 quarters ago, because it can take a long time. These numbers are reasonable, but we don't know how accurate they are. Your math is good, but the story problem is missing big chunks of context that would allow us to understand it. If we just try and assume that this quarter is the margin, I think it's missing a lot of pieces. We could see it go. We could see deployments go up next quarter with profits going down, just based on when each part of the Megapack project is paid for. So it's tough to know. We were told that they were targeting the same kind of margin, 20%.
Right.
So I don't know if 30% is sustainable.
Yeah. Okay. Okay. I think,
Okay.
I think overall, they always try for 25%. Not so 20% might have been a near-term number that they used at one point, but I think overall in every category, they're kind of shooting for 25% as their goal.
I will clarify. He said he didn't specify the percentage. He said he wants it to be comparable to auto, and 20 versus 25 isn't incomparable. And I think the margin they're looking for on autos is 25. So I will concede that point.
Okay, so ballpark, this is of course based on a 30% margin that happened in the third quarter. But as you point out, there are so many moving parts. There were moving parts on the vehicles too. There's fewer moving parts.
Uh,
There are fewer moving.
yes, yes.
Okay,
I am aware that a joke has happened. I have chosen to boycott it.
it just it
It's a
wasn't it
protest. It's a
wasn't even
protest.
it wasn't even intentional. Okay, so but ballpark, the concept, you're right. It could be lumpy in all kinds of directions, but roughly speaking, if we take third quarter as kind of a number and say we're going to get 105 million per gigawatt hour,
If you like.
could be 100, could be 95, could be 110.
Okay.
All right. So then I'm figuring a doubling of the run rate.
And especially if we're looking at the whole year, it will smooth out a bit. So I think 100-ish is probably reasonable.
Okay.
Yeah.
Okay. So, and then doubling the run rate. So that
Mm-hmm.
takes into consideration that we eventually the smoothing process will get us up to the uh,
Yes.
full Lathrop and maybe half next year of Shanghai.
Yes. Lathrop is fully ramped. And Shanghai will ramp quickly, in part because it's what they do, in part because the demand is already there. They just need to build them. And in part because megapacks are so simple compared to an automobile. They don't move.
Right.
They're not curved and rounded, and they don't crash test them. So I think Shanghai is going to ramp very quickly. While it won't be instant, I'm confident that by mid-year they will be fully ramped.
Okay. All right.
And
So
I think their capacity will be higher than Lathrop.
okay. So then what I've done is I've decided I've used all that and I've said, okay, we're going to double for the total number of gigawatt hours produced next year, which would give us a $6,825,000,000 profit for the year, a little over 1.5 per quarter.
Or in
Whoops, that cut out. What?
total or in Shanghai?
Oh,
Because
total
hmm,
together.
because if you look at the last 12 months, we're already over 7 billion just from Lathrop.
Grow in sales,
Oh, yes, you're right. It was 7 billion in sales. Thank
profit.
you. Thank you. Thank you.
So just under 7 billion in profit for the year.
Ooh, wow. Let me think on that for a minute. Yeah, 25% of 4 times as much production. Ooh, I don't know if we'll get quite that high, but it's beautiful and I like it.
Okay, all right. So then we go from there to robotaxi.
Heard of
So
it.
So for all purposes, the annual miles driven, I'm going to assume 100,000 miles per robotaxi car. That includes the deadheading.
Mm-hmm.
Okay.
Mm-hmm.
I'm assuming
Mm-hmm.
60% of the miles will be revenue miles, 40% will be deadheading. Is all that fair?
I've been asking every Uber driver I've had over the past month what percentage is deadheading, and that is about where they've been saying is probably 60% of the time is paid rides.
All right. So then Tesla, once they start the process in the summer, my guess is going to be that Tesla is going to put some of their vehicles into the fleet immediately. So these could be
Yeah.
vehicles coming
Yeah.
off of lease, vehicles that have been traded in, and then they could even put new vehicles into the fleet. And I'm just taking a number. I'm just saying 10,000.
All right.
Okay.
Sure.
On those vehicles, Tesla, I'm using a buck 50 a mile
Okay.
as my average. Is that good? You okay with that?
Yes, for the paid miles, and then you're deprecating them by the 40% deadheading.
Exactly.
Okay, great.
All right. So that would mean that there will be on the Tesla fleet, it would be about 90. See if I got it here. $90,000, $100.50 times 60,000 of revenue miles minus uh, it's only 25 cents a mile instead of the 40 cents a mile that Elon has talked about because he won't be paying himself the 15 cents
Mm,
for the fee. So 25 cents, so 25,000 times the total of the 100,000 miles subtracted from the 90,000 gives 65,000 profit per car.
mhm.
Okay.
Sure.
Okay. You multiply that times 10,000, it's a 650 billion dollar profit. And I'm
0.65
assuming,
billion is what you say there.
I'm sorry,
Your
point,
number says 0.650 billion.
yeah, I mean 650 million. Right.
Yes. Okay.
Okay. And I'm going to just take half of that for 2025.
Okay.
Okay. Private
Mm-hmm.
fleets. Um,
I think I can stop you here because I don't think we're seeing any profit from robotaxi in 25. They may be deployed, but I do not expect to see any profit from it in 25.
oh,
And I am also skeptical that we will see it in 25. Elon said late 25, but I am known to be optimistic on my timelines. I don't think we're seeing it in 25. So unfortunately, a huge chunk of your math is something I don't agree with.
okay. So I'll take that into consideration as you'll see. Private fleets, we have no idea, how many will be coming into the fleet. But if we open up Texas and California next year, there are approximately 1.5 million registered, according to Grok, there's 1.5 million registered Teslas between California and Texas. I'm assuming 5% of those come in, which will be 75,000 vehicles that would be potentially rented out in the private fleets.
I mean, sure.
Okay. Using the same math as we just did a minute ago, but 40 cents a mile on the deadheading, that would get you about 300 million this year.
Mm-hmm. Sure.
Okay. If you're same assumption as we talked about before, if we don't get to anything, actually, I mean, any serious numbers, it might be a lot less, and we'll take that into consideration in a minute. Okay, Optimus, I don't see any revenue next year. I do see maybe a $500 million savings in terms of robots working in the factory, but I didn't include that in my estimates. I just threw that in for fun.
Mm-hmm.
And then passive income, CO2 credits or ZEV credits,
You
or
you put in $500 million for something you don't think is going to happen.
like I say, I didn't include it in my final numbers.
Okay, good, good,
I
good.
threw it in here for
I
fun.
see.
Yes.
Very good.
All right. Passive income, the credits, I'm saying will increase by 25% as the fleet increases by 25%.
Yeah.
Okay.
Well, we've been told every quarter since probably 2017 that this is the last quarter they're going to get them because
Yeah, it's not true.
everybody, yeah, but it hasn't happened yet. It will happen, but not yet.
And not for years.
Not for years.
In fact, the punditry has changed their mind. I saw so many articles over the last 5 days of people saying, no, this is going to be going on for years.
Mm-hmm.
Licenses, I don't have a single license that I can, nobody, could
Not for
happen.
anything, not
Yeah.
for anything, not for the batteries, not for anything. It's very weird. Well, I mean, NACS, but that's not a revenue bearing license. So, yeah,
I'm going to just,
yeah,
overall, charging stations will increase at the same rate that they've been increasing. We will get a little bit more money out of each charging station because of all the other folks they'll be charging at our charging stalls. Insurance, hopefully it just continues to grow. Solar, no idea. That's all. Okay, that's it.
real quick, I wanted to put in if you are not a Tesla owner and you wish to use the Tesla network to charge, you will pay a small premium, or you can pay like $10 a month to pay the same rates that you and I pay. So for every couple thousand people who join that monthly subscription, that pays for one new stall a month.
Wow.
And because, $10, 2,000,
Yeah,
20 grand, that's
yeah,
a stall.
yeah.
And you say, well, yeah, but that's one stall a month. Right. It's not going to be 2,000 people. It's going to be thousands and thousands. It's going to be tens of thousands. And they are going to be meaningfully contributing to the expansion of the supercharger network. And this isn't a revenue stream so
Right.
much as a nice little bonus to help continue the expansion of the network.
Right. So for all of those categories, those other categories, service, others, insurance, so all that kind of stuff, I'm just assuming a normal continued increase as we've seen it happening over the last couple of years. We've just got into profits last year. Now we're seeing the profits expanding, and it's pretty easy to mathematically figure it's going to continue at about the same rate. Okay,
Very reasonable assumption.
here we go then. So we've agreed on the 19.4. You're saying I might be a little aggressive, but that's not,
But only because of the Juniper refresh,
right.
and that is temporary. So even if the number is wrong for 25, it's low for 26.
Okay. And energy, you said the reason I could be a little high there is because of the 30% margin. So it might be
Yes.
6.5 or 6.6, but it wouldn't be hugely different than this.
And it takes time to ramp. We don't know how quickly and effectively they'll ramp. That's a potential downside more than a likely downside.
Okay, and here's where we have our robotaxi. You see, it's only 625 billion anyway. I'm sorry,
0.65 billion,
0.6
0.625 billion. Yes.
billion. So it's not a big number, but we'll take it out in a minute just to help. And then
Mm-hmm.
then other would be, as opposed to last year, around 1 billion, would be at around 1.6 is the scale that I think it was 1.1 this year, but I'm going to just put 1.6 for next year. So this adds up to $28.45 billion.
Okay.
Overhead, I'm going to keep it the same, 12 billion. No
Hmm.
change.
Hmm. 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 I would obviously disagree. I think they're not just adding headcount, but adding expensive headcount. But it would not be it would not be a monumental shift.
Okay. Other income, I'm keeping that the same at 1.2. That's interest income versus minus interest expense, and then other miscellaneous weird things. And it's almost impossible to gauge, but it's been pretty consistent around 1.2 billion.
All right. I mean, keeping things the same is very easy and reasonable.
Yeah. And then total income, then 17.65, income tax at 22%. Subtract that out. You get net income, total outstanding, then you divide by total outstanding shares, and you end up with an EPS of $4.30.
Is that income tax based on a rate that we've observed in the previous
Yes,
earnings reports?
that's it.
Perfect. Perfect.
It's been mentioned again in the 10Q, et cetera. Yes. And
Yeah.
then if you take out robotaxi, then the net
Mm-hmm.
income drops to 13.2. It changes the total taxes. And I figured that in there and get an EPS of $4.13. So we have a potential without robotaxi 413, with robotaxi $4.30. How do you think that there's any chance that I'm in the ballpark?
So first of all, I gotta say, I appreciate that every time I asked for clarification, you were like, "Yep, that is exactly what I did." So that tells me that not that you don't have a screw loose, but that we share the same screw. And what I would ask is, what is the current earnings per share?
So the current earnings per share this year, they're currently estimating about $2.40.
So
That's Gary Black this morning.
I don't I don't listen to what Gary Black has to say.
The
Uh,
street is a little bit under him, I think at around 215 or something.
right, but what has it been for the
225.
past year?
Oh, you mean the first 3 months of the year or the
Or the
pre?
first three, or the rolling 12, the first three quarters, whichever you prefer.
I think it would be pretty darn close to that 240 or
Okay.
215,
So I
220.
think a jump this substantial would be kind of hard to justify, but that doesn't mean it's not possible. I just think that I think all of your underlying math is fine. The 430, obviously, I disagree with in favor of the 413 because I don't think we're going to see robotaxi. I do think we will see some higher costs associated with uh, building up in advance of these things before the robotaxi fleet can be rolled out. They're going to have to build all the inductive chargers and deploy them somewhere, even if they're doing them one city at a time. Now, the beauty of the inductive chargers is they're much cheaper to deploy than superchargers. You've seen how small it is. There are controls. A lot of them are built in. Many of the controls have been moved to the auto side. So they're in the car rather than in the charger. Um, and well, but people will vandalize them or steal them. No, 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 my friend. The depot is a no humans allowed zone. Why would you even want humans in there?
Hmm.
It's and you can put it in a part of town that's inconvenient to humans, but very cheap and equally accessible to robots.
Yeah.
If you look at the mechanical floor of a building, it is not a pretty place. It is not a convenient place. It is not meant to be. It's not for you. So a lot of the potential obstacles we've seen are rely on a misunderstanding of the concept entirely. So I think that, but they will have to actually, there will be costs, but they will not be earth shattering monumental costs. And if you buy a robotaxi, there's no reason you can't just buy the inductive charger. We don't know how much it's going to cost yet, but how much is a Starlink terminal? Similarly, they will build these at scale, build a cajillion of them, and Tesla's deeply motivated to have you get one if they want you to buy the vehicle. Obviously, you have to have the ability to charge it wherever you are. So I think that there will be expenses that are not listed here in order to roll out robotaxi, but they are not, earth shattering.
Right.
My projection is that earnings per share in 2025 are likely to increase. I think 413 is awfully ambitious. I don't know if I would say that that's too ambitious, but surpassing 240, if that's what we've been doing for the last 12 months, appears quite reasonable.
So if you double your energy just alone, then you're doubling a big, big piece of the total pie. And then if your cars are going,
I would say none of the megapacks built in Shanghai will receive their final payment by the end of 2025, because I believe from building it to deploying it to electrifying it is more than 12 months. So there will be a lagging, a substantial amount of that money will be lagging.
right. But
So going into 26, all those would start catching up.
right.
But
But
it's a
so
flywheel. You have to spend time getting it spinning.
So on the other side of the coin, though, the amount of deployments in the Lathrop this year have been at about 50% of capacity. So that lumpiness should go away, and that alone could get us very close to doubling next year.
All right. I will trust your astrology over Gary's. And by the way, I do put your analysis above Gary Black's. Sorry,
Okay,
Gary.
great.
Sorry, Gary.
And again, this is a very simple way that I've done it. This doesn't involve figuring out every single car,
No.
every single margin on every single car, and exactly how many blah blah blahs that are getting. No, this is a napkin math approach, but I don't think that it's. Uh, I think one of the reasons that you see the profits growing so much faster than the revenue is because when you have a company that has 25 roughly percent margins, even a 20% margin company, which I've run these kind of companies, once you get past break even and you've got the factory taken care of and the basic overhead taken care of, then the profits they go vertical. So it's going to be more if you double if you 50% your sales, you're going to 75% your profits.
So the problem is Gary's GIGO approach is not great because he puts a lot of weight in the worst analysts, retail analysts, and perhaps Wall Street analysts. I don't know who his Wall Street analysts are, but I know who he loves on X, and he gets the worst. And of course, with the GIGO approach, you know what you're going to get. You know GIGO, right? Garbage in, garbage out.
Oh yeah,
It's
that one. That
it's
guy go. Oh, I know that guy go very well.
yeah, and so you'll recall in I think it was Q2, Gary's Gary had the least accurate of all the analysts' estimates for production and deliveries because he had based it on a 1 week old estimate from the second least accurate
Yeah.
prognosticator, and no amount of trying to tell him that there are fundamental flaws in the underlying assumptions from the source that he gives the most credence. Uh, Gary, these is people's retirements you're gambling with, and you've got to talk to real experts for crying out loud, or not. I mean, maybe he's doing quite well for himself.
Well, a person who right now has a lot of credibility among the troops is AJ. AJ did miss this last quarter's number, just like everybody else did in terms of profits. But AJ, I think by the end of the week, might have his 2025 numbers. So it'll be interesting to see how he comes out compared to these.
AJ can rub some people the wrong way, but he is fact based. His research is deep, and I have tremendous respect for him. And he's one of those people who has said that I have just unlimited license to use his material with credit, but I still ask every time because it is that's a bridge I just will never burn. He is too good of an analyst out here. And yeah, if you're not following 𝐤𝐽, 𝐤𝐽𝐽 on X, it's some good information
So
about
that
all the brands.
Right. So now if we take that earnings per share, let's round it down to $4. We take that $4 and we multiply it times a PE of 60, we would get to 240, which is under where we are right now on a forward basis. But if
Our
we use
PE is very high right now.
well, it's been around 100, although with the new profit and
That
loss
that
with
was very high too.
yes. But if we use the 100, which is not unusual for Tesla, given the huge potential for robotaxi and Optimus, then if we use the 100, we would be at all-time highs again by the end of the year. So Randy is predicting that we'll be at 300 shortly, maybe this week, maybe next week, maybe the following week, but we'll be at 300 shortly, and we will be at all-time highs in maybe by the end of the year or in January.
All right. Well, you can stop calling me shortly. I get it. No, the a big building full of sick people, but it's not important right now. No, the my question for Randy would be how many of your ambitious price targets have come true?
One.
So
But it came true on the exact day. That was pretty good.
that is exciting. That is exciting. What you need is more darts. So just keep throwing them. You'll do good. I don't follow the short term. That's why when you would say a number that I disagreed with, I'd say,
Right.
but in 26,
Right.
because I posted on X right after the earnings saying, by the way, to the folks who said I'm going to sell out and then buy back in on the dip after earnings, I'm sorry, but it didn't work out for you this time. And it's not financial advice, it's gambling advice. Don't gamble.
Right.
You're going to have a bad time eventually. And I know people my buddy went to Vegas and he won. Yeah, some people do. But if you keep going back, your odds get worse. You revert to the mean.
Yes, it's true.
Yeah.
You revert for sure. Brian, as always, thank you for coming in. And I don't know where did we end up? I'm not 100% confident. I don't know.
In the comments is where I'd like to know
Yeah.
where you guys ended up and what you think of these numbers. Is the earnings per share too high or low? Is the price to earnings multiplier too high or low? I have a theory on that. It's too high. And what do you think the stock price will close at the end of the year or the end of next year?
Yeah. Okay, good. All right. So, Brian, everybody should follow you, of course, on next. No, I was almost getting the other
Oh,
Brian.
wow. You can't tell us
Future,
apart. You
future,
Bryans are all the same.
future. And I even have a son named Brian. It's just so confusing. So, Future Ozza is where they should be looking for you everywhere you are.
Appreciate it.
All right. It has been great talking to all of you. I'll never find the off button, Brian,
Certainly not when you're
because I'm
sharing the
sharing.
screen. It's even
So I think
harder.
I have to stop sharing and then I can push the off button.
But